Welcome to Next to Madison, a podcast to help you live your best life.
Hey, welcome back to another episode of Next to Madison. We are continuing on the crypto craze. Last week we had Anthony Scaramouche talking about his Bitcoin fund. And this week we were talking about a different cryptocurrency, one by the name of Cardano, which trades under the symbol ADA. A friend of mine who is joining me today on Next to Madison actually introduced me to Cardano. And I'm excited to talk about it. And again, just a warning, we are not financial advisors. This is just our opinion. So please do your own research before you invest any money, and always invest what you can afford to lose. So with that being said, I want to bring on my guest, Scott Wallace. How are you?
But you're going to get freaking rich. No,
yeah.
I'm kidding.
Exactly.
I'm good. How are you?
I'm great. So you introduced me to Cardano. We were talking a little bit about crypto, and you said, I got into this Cardano thing. Let's talk about that first. How did you find?
Hold on. You keep saying Cardano.
Cardano.
Oh, okay.
Cardano.
Cardano. Okay.
We call it ADA. So
ADA.
How did you find?
Actually, hold on. Time out. First thing, somebody corrected me on that because it's actually ADA. They were like, somebody in my YouTube comments was like, you lost all credibility because you called it ADA, or I called it EA, because it's actually named after like this famous mathematician, Ada Lovelace. And Ada Lovelace, let me just pull it up here. Ada Lovelace, quick little thing. Ada Lovelace, Augusta Ada King, Countess of Lovelace, was an English mathematician and writer, chiefly known for her work on Charles Babbage's proposed mechanical general purpose computer, the analytical engine. Born 1815, died 1852. Rest in peace, Ada Lovelace.
Thank you.
But yeah, I know, with the crypto slang, a lot of the times the we say ADA, whatever.
Yeah.
Dollars.
Yeah. It's ADA is the symbol. So let's talk about it, because you've made a lot of money on this. So you found Cardano when it was about.
Okay, I'd like more.
You're gonna make more, but you got in around 7 cents.
Mm-hmm.
What was that moment like? How did you find this and research it and say, you know what, this is the thing I'm getting behind?
That's a great question, actually. The I knew about, what's terrible is like you learn about you hear about things, but you don't actually take the time to learn about things. Like I heard about Bitcoin, I want to say in like 2011, 2012, and it was more of like a punchline. It was like, yeah, Bitcoin, fake money. And then I have an account that goes back on Coinbase to like 2013, and I like never used it. I guess somebody told me about it, and I downloaded it, and I was like, this is so weird. And then I just wrote it off for another 3 years. And then around 2016, I just started reading about it, and I don't know. It's not just one light bulb moment. I think you have with this stuff. Many epiphanies come to you when you have these grand realizations of what the possibilities of what some of this technology can do. And in 2016 and 2017, I started to get really, really involved in it. And there was a bunch of stuff coming out. There was a ton of ICOs. A lot of them went to zero. And it was a super duper exciting time. At that point, I had enough of those grand realizations where I was like, this is the future. Like, I know that I'm kind of in my own little bubble thinking this. I get that because you say it to someone else, and to them, it's a joke. You say it to certain people right now, and it's a joke to them still. And it's like, but yeah, if you just look, but those people, 99% of the time, they just haven't done their homework. Like it's point blank, it'd be like telling somebody about the telephone in the 1800s, and they were like, yeah, right. Like,
yeah, right.
they just don't know because they don't know, simple as that for 99% of the people. The other 1%, I don't know, maybe they just have some objection to it. I don't know. But that's where I kind of really started to get my education. And it really does take an education. And I started looking into various different projects, and I've owned very many different coins. And one of the ones that came out was ADA. Oops, sorry, ADA. Was ADA. I did it right. And just the backstory behind it's very interesting. You know, Charles Hoskinson was one of the co-founders of the Ethereum project, along with Vitalik Buterin, Gavin Wood, and a bunch. I think there was 9 original founders of Ethereum. And because of what happened at Ethereum, like they were basically starting their smart contract platform, and you know they were starting that platform, but like it's kind of like if, let's say, you and me said, hey, let's go film a movie today, with not really a plan, and you just start doing it and start turning into something. But then I think it started turning into something bigger than what they thought it was actually going to be. And then it's like, oh, wait, hold on. Then, you know, the infighting, I think, began. And those, like Charles Hoskinson left Ethereum, Gavin Wood left Ethereum, and Charles created Cardano, and Gavin Wood created Polkadot, you know, 2 smart contract platforms. And the thing number one, first and foremost, the creator, Charles Hoskinson, like the man is on another level as far as intelligence goes. If you watch his YouTube channel, you can learn a lot from that guy, not just about, you know, the tech of this. Of course, he talks about that, but just in life. I think the guy's a natural born leader, it seems to me. So that's, I think, like one of the first things that I kind of noticed. But also when you start to read into the fundamentals of what Cardano is, it's just structured a lot better. Part of the ADA Cardano system is they have built-in governance features. That way the network can vote on certain things, and the network decides what happens. It's faster, it can do more transactions, it's more scalable, and it has way more languages than Ethereum. Ethereum, I'm somewhat techie, I'm not gonna lie. Ethereum, I believe it's written on Solidity. That's a programming language, right? Cardano has Haskell and a bunch of other coding languages that it uses. So it really opens up a lot more potential for developers to come to the Cardano platform. Now, right now, they cannot come to the Cardano platform because they haven't launched Goguen. Goguen is the next phase where the smart contracts are going to be rolled out. So I think overall the whole concept of, I think Ethereum's a very cool project. I think it'll be successful in the future. I do believe that. I just think Cardano is better, plain and simple. It's basically like, you know, they created this one thing and they were like, oh, we did something really cool, but there's a lot of stuff that's broken with it. I went to make a trade the other day, okay, on Uniswap, for instance. Uniswap is a decentralized exchange. For those of you who don't know, people call them DEXs. DEX, as in decentralized exchange, and the fee on there was like $200, like to make the trade. You know what I mean? I'm like, this is insane. This is like the opposite of it. My friend sent me a screenshot. I don't want to go blank on you here. Let me see. So he sent me a screenshot. Hold on, Madison. Let me read this to you. And just to give you an example, he said, look at this. He goes, he's trying to, what is he trying to do here? You are trying to send an ERC20 token, which are issued on the Ethereum blockchains. This means you need to pay ETH to pay the miner's fee to send this coin. And he says, they're going to charge me $27 to move $37? This is insane. Like, that doesn't make any sense.
No.
Like, you try to buy a cup of coffee with this stuff, it's going to cost you more than the coffee. Like, they are trying to update and upgrade their system from a proof of work blockchain to a proof of stake blockchain, which is hopefully infinitely more scalable for the Ethereum project. But they've yet to do that. When I could have.
You hold on, Megan. You can't stake Ethereum as of today. Is that correct?
Not that I'm aware of.
Okay.
Can you say?
Well, here's the thing is, I don't know. I think
I don't believe so.
that's coming out because Coinbase, which, you know, I've purchased
They've
stuff.
advertised their Ethereum staking.
Yes,
know.
they said it's
Yeah.
coming out. It's going to be available
No,
soon. 7% is what they're going to pay. But I don't think it's launched yet.
Not available. Pardon me?
It hasn't launched yet. I think Coinbase is going to do their IPO, go to direct to market listing.
Yeah,
and
no, it hasn't
when that
launched yet.
happens, then I think staking will be the next thing. So let's stay on course with Cardano real quick. So
Absolutely, yeah.
before you put in money in Cardano, what was that moment that you said, you know what, I'm taking this risk?
I don't remember one specific moment that I think it was like just continually like diving into the space, looking at a bunch of stuff. I mean, there's other projects that I like too. And kind of just at some point, yes, coming to the realization like, hey, this one seems very prominent, because I like to look at this stuff from like if you're talking about like from an investment strategy point of view, from like a 5 to 10 year outlook, as opposed to a like, oh my God, if it goes up 200%, I should sell, because that can get you REKT wrecked.
Yeah, absolutely.
You might make money, but then it might go up 1,000% after that. And you're like, oh, and then you buy it at the top, and then it drops down. And you're like, oh, you lose all your stuff, you know? So yeah. I look at things from a very much like, hold on to something that's valued. I saw it at the time. I had seen the general public had really lost interest in the crypto thing. I mean, people would even say to me, that was a fad, da, 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 da. It's like, yeah, but the Bitcoin has historically rallied every after every Bitcoin halving. Generally it's 6 to 16 months, I'd say, after the Bitcoin halving, and all the alternative coins, Ethereum, Cardano, Ripple, et cetera, they rally too, and they tend to rally even harder. So when I'm looking at Cardano at 7 cents, I'm like, wow. I'm like, if that just goes back to the all-time high, that'll be $1.33. Those are sick gains. So so I just kind of I had that realization that the tech was there, and the coin and the tech that was coming that still hadn't even come out yet was, in my personal opinion, seriously undervalued. I mean, Ethereum in 2016 to 17, it did a 100x. Okay, that's a 10,000% increase. Now that's insane, right? I'm like, well, if he just does a tenth of that, or it just, I mean, it doesn't even need to do it. Yeah, a tenth of that is it's a 10x. That would be a crazy good investment, right? And I basically was like, hey, the Bitcoin, when it halves, it'll probably do what it's historically done every time, because the supply is getting cut off and the demand increases ultimately.
Yeah.
So, and I didn't just say, hey, let me take, 50 grand and throw it into Cardano. I dribbled small amounts of money over several years into it on a weekly basis.
Okay.
And once it started to rally, I stopped doing it. Although I probably shouldn't have. I probably shouldn't have. In retrospect, it would have still been a very rewarding thing, but I did. So.
Okay. Then it's been amazing, because I remember you and I had a conversation almost a couple months ago, and you got me excited, and I obviously never invest more in crypto than you can afford to lose. So I took what I could, called it funny money, and said, you know what?
And bought more funny money.
I trusted you. I'll admit, I didn't go and read the white paper and do all my homework, so to say. I said, well, fuck it. I've got, a couple grand to lose. So I went into it, and I'm happy with it. And then from there, I want to talk about this thing that's becoming a new term that more and more people are going to hear about, which is staking. So I just joined a staking pool that you recommended to me.
Awesome. Yeah. That's a great staking pool. I think Krishna, KRSNA.
So I want to talk about, because you have a lot of the people listening to this, either really they understand crypto or they don't understand crypto, and they're trying to learn more. Maybe they just bought certain cryptos on on Coinbase, but they don't understand that they shouldn't leave them on a wallet, on an exchange, and they should move it to a wallet. And then there's this whole staking things, right? So you hold them in a digital wallet, which is a safer place than on an exchange. But instead of just holding them there, there's now all these things called staking, which encourages you to hold and not sell the currency, which helps the value of the underlying asset, right? That's the whole brain behind it. And we're paying you like 5.3%.
That's sort of correct. The value increase is, I mean, it's a positive symptom of the staking process, but the staking process is ultimately, you're just participating in the decentralization of the network, which is the whole entire idea behind these a lot of these projects, obviously. Cardano, Ethereum, Bitcoin. So let me make a little announcement. As of today, I invested I think it was about $36,500 into my own staking pool, which I am running. The ticker symbol is NERD. So if anybody wants to go, and I think it's going live in about 2 hours, and delegate to that pool, that would be awesome. If you know about stake pools and stake pool delegation.
Very exciting.
Yeah, that's super exciting.
What is the return on your pool? Do you know that yet?
That's a good question. So typically the returns on these pools are going to pretty much all be relatively similar. It's going to be about 5. It's going to be about 5.5 is the average.
5.5 per epoch, which runs every 5 days. Is that correct?
No. 5.5 APY per year. If it was 5.5 per epoch, I would be a very wealthy man.
Yeah, that's true. Me too. Oh, yeah. I'd be a wealthy woman. I don't have a penis. I act like I got a set of balls, I'll tell you that much.
That's nice. So listen. No, you do.
They're just on my chest.
Hey, you have, that's funny. Yeah. Make my face turn red. Well, it takes balls to get into crypto. It does, because you're going against the grain. You're doing something, on the fringe in a sense, but it's becoming more and more mainstream. Back to the staking pools though. So yes, what you do is that you buy it on an exchange. You buy your ADA on an exchange, you send it to your wallet, and you could use, I recommend the Daedalus wallet or the Yoroi wallet. And then from there, you simply delegate to your pool. It's quite a simple process. And that's one of the other things I really liked about Cardano was that the Yoroi and the Daedalus wallet, you've used the Yoroi, right? On a scale of 1 to 10, what would you say is the ease of use factor? Like, how easy is it? Scale of 1 to 10.
8.5 to 9. So just so you guys know, it's YOROI. You can go to the App Store and put the digital wallet right on your phone, and then you set it up. And of course, if you're new to this space, it is so vital that you get these 12 key, there are a certain amount of words.
It's a 12-word seed phrase, which is a fancy word for big ass password.
Yeah. Write it down, save it.
Do not lose that password.
Yes. And that's your digital key. So if you were, for example, let's go back to the Euro.
So my stake pool is, by the way, NERD, as in nerd. So if you guys do look for it later, that's which the ticker symbol on it is NERD, and it's Hyper Nerd is the brand. So keep an eye out. I'm excited.
This is very exciting because
super exciting.
I just learned about staking through you, which was why it was so important to get you on this podcast, because I want to share that information.
Yeah, super cool.
Because people have heard about mining is a way to earn coins. You can either invest in the coin, you can mine the coin. Obviously, Bitcoin is very expensive to mine. It uses a shit ton of energy. So it's very difficult to do. Obviously, there's a limited supply of Bitcoin, so it's not as profitable as maybe it once was when it started. But there was the mining and then the purchasing, and now there's staking, which is another fucking awesome way to make more money.
Hell yeah. And it's definitely just more eco-friendly. I mean, Bitcoin uses more energy than American Airlines, and each Bitcoin,
Crazy.
yeah, each, 1 billion that inflows is actually equal to owning 1.2 million cars. Like, it's insane. It's insane. It's not like I don't know how sustainable that is. Like, because the mining rigs, like, I don't know if you've ever seen like a video of inside of a Bitcoin mining operation, but like those don't look like fun places to be, because they're just miners just going like monster computers, like stacked on top of each other, in Iceland, where the electricity is cheap, so it's a profitable thing to be doing. Like, you wouldn't want to do it where like the electricity is high and it's really hot out. But those miners that are, China, Iceland, I mean, they're all over the world. Those are ultimately supercomputers that are contributing to the decentralization of Bitcoin, which is cool. Staking just kind of says, hey, now you can do it from a normal computer.
Right. And a lot of people, like, either it's a complicated process and it's expensive. Well, depending on the coin, it's expensive.
Correct.
So this new staking thing is a way to earn more of the crypto you're holding in these pools, which I was fascinated by, because I didn't need to go and spend additional money buying like a rig or some computer processor or something that would use up a lot of energy, or just something that would take up space or time. Where it was so easy to do it. So I want to go back for people that are like, what is staking? Like, staking, like, I've heard mining, I've heard crypto. So let's like dumb it down completely and explain what staking is and what it means and why you're getting paid for it.
Staking, similar to Bitcoin, staking is a bunch of computers all over the world that are participating in the decentralization of the network. Okay? And by doing so, they are confirming transactions on the blockchain ledger. The blockchain is a ledger. Okay? So all those computers, instead of like, let's say like Facebook, for instance, that's not a decentralized network. It's a bunch of computers, I believe, out in Palo Alto, California. It's run and, owned by one guy, Mark Zuckerberg. That's not now we all go on that network with our respective profiles, but his computer servers are his. You know what I mean?
Yeah.
Bitcoin computer servers, they don't belong to anybody. I'm sorry, the computers that help decentralize the network, they don't belong to anyone. Same with Cardano. Cardano, the staking pools ultimately are I'm just going to call them computer servers. They're referred to as nodes. Okay, but just think of it as a computer server. And that computer server, which I'm hosting, will receive delegation from people who own Cardano, just, normal people who own it and want to delegate and say, hey, cool. If this thing, goes to $10 and I earn, 5.5% APY for 10 years, that's a really good return, especially if the asset appreciates. If it doesn't, it's still not bad. You know what I mean?
Right. And it's a relatively safe investment.
So did I
Cardano's around, or any of
from my personal opinion, not financial advice, is that, yeah, I think if I'm looking at a 5 to 10 year outlook, yeah, Cardano is going to be around. I would bet more on it if I could. I just, it's crazy. Like, you in this space, I'm sure that you've started to realize it's like, wow, you learn something new like every day. You're like, whoa.
So cool.
And then you're like, oh yeah, it's so cool. And it kind of like will blow your mind. Like, and then you're like, wow, wait till the real mass public figures this out. Like, and a lot of the problem with that is that a lot of this stuff is like not easy to use. Like, it's just not. Like, they need easier user interfaces so that anybody can do it ultimately, because a lot of the tech that's out there right now, it's like your average guy, works a normal job, has 2 kids, a wife, and a dog and a picket fence. Like, he doesn't have time to go dabbling around in, smart contracts, sending coins. Like, it'd be too scary. Like, fear of the unknown, like sending coins onto the blockchain, following them through Etherscan, or like some kind of blockchain explorer. Like, he's like, I'm out. You know what I mean? So
That's exactly right. And I think a lot of people, but obviously, things like cryptos like Bitcoin have become very popular because they've been adopted by the mainstream, and you can actually use them, which is great. But now more of these banks, where I think like our older population, or just more of a safer thing, is saying, okay, I have to go buy the coin on an exchange, whether it's Binance or Coinbase or any of the other ones, and then I can't leave it there. Now I got to go find a wallet, and then I got to transfer it. And if I do the wrong thing, so for an older generation,
if you do
how this could be fucking like, I'm out. Like, I remember like telling my father, and I was saying, you got to get in. Like he was saying, oh, well, the grayscale. I'm like, don't do the grayscale. Like, fuck that. No, it's a trust. It's not going to appreciate. The fees are really high. I said, go and buy it on the exchange. I said, well, now you got to get it off the exchange. She's like, what? So it became, but he got it eventually. And then we had the conversation about staking. I said, well, now you should stake it or move it to a digital bank so you can actually earn money on it versus just holding it. And he got overwhelmed. He was like, I'm in the middle of tax season. Let's talk about this later. I go, okay. So each day I'll drop shit to him that I learned. And he's like, whoa.
I'm doing the same.
That Ethereum is staking in Coinbase. And I was like, I know, I'm still trying to learn more about it. So
your father said,
well, he saw the Coinbase article that I saw that Ethereum is going to be
so he saw it on
staking at 7%.
So he saw it on his own.
After I brought it up, and I said we had that conversation.
Okay. He was like, interesting. That's interesting. Maybe I should talk to my daughter more about that thing. What is that staking business?
It's family wealthy. I'm like, do this, because like they know finance really well, and I should too because I majored in it, but I feel like I know crypto more than them. So
I mean, that's how it is in my family too. Like and it's hard to just be like, do this. I unfortunately, it's like, what's that?
It's overwhelming. I remember the first time I was doing
like, do what? What am I doing?
Well, I remember, the first time I was using an exchange on my phone. Well, I was using an exchange on the phone, or I was sending it from a wallet to an exchange to sell it into US dollars to get into my account. And I remember it was like you hit like the send from the wallet, and then you copy like the QR code, and then you have to paste it. But like, God forbid you hit the wrong thing, like you could. It was scary. And now I could do it in my fucking sleep because I do it like weekly.
You should really check the addresses. I'll be real. I don't like read every letter and number out. Like that would be insane.
Dude, I just hit copy and fucking.
I'll just check like the last 4 digits on it, just to be sure. You know what I mean? Like if I look at the last 4 or 5 digits to say like, oh, okay, did that work? Like, or is it make sure the right things? I mean, I
know people that have lost money for sure. They sent it to somewhere and now they can't find it.
Oh wow! Luckily, I have not done that. Although I remember, I guess it was like 2 years ago, I sent like $500 or $1,000 of Stellar Lumens, XLM coin, to I think KuCoin, and I'd never sent Stellar Lumens. I just held it on I just had that on my Coinbase, right, for like a couple days, but I wanted to trade it. Okay. So I'm like, okay, I'll just send the Stellar over there. And I didn't know this at the time, but there's something on the Stellar Lumens that's a memo, and the memo has to be input. If you don't put the memo in, it will like, what does it do? It'll send it, right? But it won't send it to your exchange wallet address. And you're like, and fun lesson to learn when you're talking about, $500,000. You're like, oh, okay.
Yeah.
So I was actually able to get it back. I had to reach out to KuCoin Proven Identity. I had to pay them like $25 in Ethereum to like perform this task for me as like I guess they go, I don't really know the specifics of it, but like somehow they go into their own network because it's like a bigger pool or wallet or something, and like fished out the funds, and then they gave it back to me. I was like, it was ridiculous. So
right. So let's get back to
the staking.
Right, the staking. Are almost all cryptos stakeable?
No, definitely not. Let me just clarify for any of the audience out there. just to reiterate it to you, it's a bunch of computers verifying transactions on the blockchain. Those computers are helping towards decentralization, and if you're staking with one of those computer servers, you're helping the decentralization of Cardano or any stakeable crypto. In simple form, just to reiterate that.
Why are some cryptos not stakeable? Why haven't they done that?
Well, then they're mined like Bitcoin.
But can you mine and stake? Because Ethereum is mineable, but now they're starting staking.
But it's not available yet because it's still mined.
Okay, very interesting. I think they're working on that because I think there are going to be some cryptos you can mine and then stake. I'm doing my own research on that and something else, and I'll come back and talk more about that. But here's the thing: is so have you heard of BlockFi?
I have, yeah.
Okay, so it's one of the DeFi banks where basically they're lending out your coin, right? Like they have a credit card coming out, or they just launched it.
Right.
Loans in these coins. So people are putting like their Bitcoin or their Ethereum into places like BlockFi, and they're getting like, I think it's 5% on 5.5% on Bitcoin, and maybe 7 on Ethereum, or maybe I got those switched up. And then if you do a stable coin, the Gemini coin, which is GUSD, it'll always be at $1. They're paying you 8%, and then BlockFi actually pays you your reward or your interest in US dollars. So, but you're the reason that you're getting 5%.
Yeah, we talked about that the other day.
Is because they're lending that out. So you only get paid based on the risk. So if you're getting a really high return, it's because your risk is higher. Now, I don't think
I don't know the BlockFi project well. Of course, I've heard of it. BlockFi. The thing is, though,
you just couldn't get your crypto all at once. So let's say like you owned like 100 Bitcoins and you put it into BlockFi and you're making a really good return. And then all of a sudden you're like, you know what? I want out. You couldn't immediately just grab it, like, cause it might be lent out. So it takes a little bit longer. So it's kind of that whole thing of like, we're encouraging you to hold this, so to say. And I don't think they obviously don't have FDIC insurance yet. I think that's coming down the pipeline as more places like Fidelity have gone into digital storage, and Bank of New York Mellon, I think, recently has as well. But that's not staking. That's different.
Yeah, I'm not familiar enough with the BlockFi project. I've heard a lot about it. I'm looking at it now, crypto-backed loans. But the one question that it comes to mind is like, but do they pay you in US dollars or do they pay you in crypto? Like, are you...
This one specifically pays you in US dollars. So then you can put that back into the bank. But yeah, they do pay you in USD. So maybe some people will say, okay, I'm going to take the appreciation of the Bitcoin or Ethereum as it goes up, right? Not the stable dollar.
Gotcha.
And I'm going to use maybe the interest I'm making as like, maybe to buy more crypto, or as like,
you get that?
My mortgage.
Oh, I see. Okay. So
shopping or whatever it is.
100%. That's not bad.
I do want to drop this. I just want to say this.
Although, hold on. Let me say this though. Okay. What happens though if you said, okay, well, what's the alternative to that? I could stake with ADA, and what if ADA goes to $10? Was it worth getting the US dollar payouts in that case? No. So that's a calculated
US dollar and go buy it on the exchange and transfer it back. So I wonder if BlockFi will open up that option to where you can choose to get paid in USD, or you can choose to get paid in the crypto that you're holding.
Right.
That would be interesting. I should try to contact.
Yeah, I wonder, like,
we can have a combo.
That's interesting. Yeah. What, BlockFi?
Yeah.
You should get someone from there. You seem very interested in the BlockFi thing. I know we've talked about it.
I am. I definitely
get somebody from their team on your channel.
Yeah, because it would be interesting to talk about. Because obviously people are going, holy shit, 7%, 8%, blah, 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 blah. That's great. But you realize the higher the reward, the higher the risk. It's standard investing principles. It is 1-1. That's it.
that
It's
have
fucking as basic as shit. If you're getting a 20% return, you're doing a riskier thing. But you know what? That's what life's about. Financial advisors are going to get patted on the back this year because the Fed is fucking with the market left and right with the interest rates and the printing of the money like crazy. And just like, you know, this market isn't real. It's so overinflated. It's insane. But of course, every advisor is going to get a blowjob this year. Are you kidding me? Like, they have totally crushed it. But the thing is, like, you couldn't lose in this market. Next year, they might get a slap in the face because we're going to have some correction going on. But that's the thing with blockchain and stake. But that's what I want to talk about with staking. You're getting 5 to 5.5%. But what's the risk? Is it a medium risk?
Well, hold on. Let me comment on what you just said, and then I'll tell you what the risk is. Saying you can't lose, you definitely can lose at any point in time. That's my opinion. But you're right too, in the sense that, like, yeah, the bull market has been like trending up so hard that yes, a monkey could trade the crypto and make money at this point. Like,
or the market,
at least
it's insane.
But yeah, over the last 180 days. So, but what's the risk to staking? Well, if you're staking with Cardano, I don't really see a large risk, being that the crypto is staked from directly within the wallets. Okay, you don't have to lock a lot of these. Pardon me. And
it's not going anywhere.
Yeah, I don't see it going anywhere. I see it getting bigger and growing a much larger fan base and amount of users. I mean, people are passionate because when they see what the tech below it is, it's like, wow, what if Cardano absorbs part of the derivatives market, which is a $1 quadrillion valuation? Like, what if it just takes part of that? Like, because it's a better system, it's faster, it's not convoluted. Well, think of what kind of return you might be looking at. So the thing is that the staking happens from within these wallets, your Roy wallet or the Daedalus wallet, okay? And you just simply delegate your stake to a pool. At any point in time, you can take it out, use it, spend it, do whatever you want with it, right? Idea I've actually been toying around with is, like, how cool would it be? We should do like a Cardano festival or something, like a Cardano music and arts festival, where it's like you just come and spend ADA. Like how fun would that be?
That would actually be cool.
That'd be super cool, right? And totally pull that off. I have some really good connections in the festival industry, like really good ones. So, humble brag.
Let's talk about that. Yeah, let's talk about that. Let's talk about that off. We'll come back when we're.
So the risk for Cardano specifically, I don't see a huge risk. The only risk would be if the stake pool operator isn't maintaining their computer network 24/7, low latency. They may not be minting blocks, and if they're not minting the blocks and verifying the transactions on the ledger, you may see diminishing rewards from that particular stake pool operator. In which case, you can just redelegate to another stake pool. With other,
you're going to lose your Cardano, you're just going to have less rewards if they suck. That brings me back to the next question. There are a ton of, when I was on my Yorori wallet and I was delegating my Cardano so I could earn more money, because money is brilliant, I noticed there's a ton of pools. How does one research and know that they're in a good pool?
Well, I think knowing the creators of the pools, having some transparency with the community, because ultimately you're performing a function for the community. Okay, you're performing a big function for the people who have ADA, so they're relying on you to do what you say you're going to do, and so they can receive their annual return, and they're not getting 2% return or 1% return. And let me speak a little bit more on staking. You're going to see staking in places like Coinbase, and you're going to see staking in places like Binance. Okay. I'm not a huge fan of those stake pools, because it ultimately, look, if Coinbase has 500 stake pools and Binance has 2,000 stake pools, that doesn't contribute to the decentralization of the network at all. that almost makes it more centralized in a way. They have more control with all those stake pools, and there's things that someone with that many stake pools could do to affect the network. So
when Coinbase offers stake pools, are they allowing very smart, sophisticated tech users to create pools and operate it through Coinbase, or are they doing it through their
yeah, definitely not. I would say definitely. Yeah, I would say definitely not. That'd be cool if they did.
Why do you think that Coinbase, which I'm so fucking excited for this IPO, by the way, I'm like, yeah, is
I want to get in.
or the thing about Coinbase, how are they able to offer 7%? Do you think? Because they're not lending it, they're staking it.
Are you talking about on Ethereum?
Yeah, they're offering 7% staking on Ethereum. Coinbase is
Ethereum. At some point, the Ethereum project saw the writing on the wall. Okay, and was like, oh, they kind of, they copied Bitcoin with a proof of work model, and then something better came out ultimately that was like, oh, that's way more economically and ecologically friendly, more eco all around. We need to switch. Like, this isn't really sustainable if we want to grow our network. So they're trying to switch their network into a proof of stake from a proof of work, which is not exactly easy. That's like me pulling up in a Rolls Royce saying, hey, put this Ford engine in it. That's not an easy task, and it might not work that well. It's not just easy to completely gut something and in place a completely new operating system. You know what I mean? Like,
right. You're right.
So let me get to my point. So the point is that at some point when they came to the realization that we need to go to proof of stake, that's the smarter path for our vision. They probably said, we're a little behind the 8 ball on this. Because it came down to them. How much rewards are we going to offer the people? Like, what can they earn? I kind of see the 7.5% from the Ethereum network being a little bit of a desperate move in a sense. I mean, maybe it works out that way. They're ultimately giving away more money faster that way, in essence. Okay. But it's probably, I mean, I haven't done the math on that. Like, when do the rewards run out, with Ethereum? But ultimately they're going to get more money faster.
So, okay. So that brings me to my next point.
I thought that, why is that so much higher than Cardano's? Well, they want to keep the user base.
And so that brings, okay. So they were a proof of work, like Bitcoin. They're switching over to proof of stake. So there's
Correct.
only less than 3 million Bitcoins to be mined. Based on the model, it'll take 100 years for the rest of those to be mined, right? We'll be dead.
Correct.
But if we have, our offspring will be alive if we have any.
Sure.
So when do you think Bitcoin will adapt to a proof of stake?
I don't know that it can. I don't know that it can. And the reason, that's a great question, actually. Yeah. That's a very, very smart. The reason from a technology point of view, I believe, yes, Bitcoin could become a proof of stake. But the people who, Bitcoin is an open source code, right?
Mm-hmm. Yeah.
And they've tried to evolve Bitcoin. Okay, like the technology of Bitcoin, like there was something called the Lightning Network that was implemented into Bitcoin to make it faster. But there's a lot of infighting within the people who kind of control Bitcoin and the future developments of it. And if they can't agree on it, because it all goes back to like the Satoshi Nakamoto, the creator of Bitcoin, they all, like half the people are like, no, we need to like evolve with the industry. Okay. Yeah. And the other half of the people are like, no, we need to follow Satoshi Nakamoto's vision from his 10-page white paper. Like, I'm sure he didn't even think this would go that insane. Like, come on. Like, that's ridiculous. That's
right. He's like still nowhere to be found.
So it's literally almost like, some people who are like, no, every word in the Bible verbatim is how I'm going to live my life, versus the people that are like, that was written 6,000 years ago. Or like, what? No, you have like there's right and there's wrong, and like I'm not gonna I don't know. There's some wild stuff in the Bible. Have you read the first page of it?
I love the Bible, but yeah, it's obviously times are evolved.
you have those two thought processes, one going like, no, Satoshi Nakamoto, we must stick to what he said. And the other people like, this thing's gonna die if we don't evolve it. And that doesn't create solutions when you have those two thoughts.
Yeah, no, that absolutely makes sense. I mean, I know we have to wrap up soon, but I mean,
Yeah.
obviously this has been amazing. So you guys, like, if you have questions,
Awesome, yeah.
reach out to me. I can guide you to Scott as well. Scott also has a new YouTube channel about Cardano
YouTube.
that has blown the F up. And
Right.
like, it's so funny on some of these episodes of these podcasts, I'm like so prim and proper, but then I have like super fun guests where I'm just like, fuck it. Oh, because I still have the comedy thing in me, even though I have a serious side. So anyway, he's got this great YouTube channel that's focused all on Cardano. It is really grown.
Yeah, it's really grown. 3,000 subs in I don't know, 2 weeks, 3 weeks.
That's so where can people find you to learn more about Cardano?
Just go to the search bar on YouTube and type in Wallace Inc. and you will find me.
Perfect. And that's WALLACE Inc.
You got it.
But yeah, he's very entertaining, and he talks about all this stuff. So if you guys want to learn more about Cardano, I just, what kind of drew me with you is your energy and your passion behind it. I remember like we had a call and you're like, Madison, you gotta check this out. And like before you even finished your call, I was on my phone. I was like, yeah, fuck it. I got a couple grand to fucking blow. And it was in Cardano. And I was like, all because I trusted you. And I'm glad I did because it's gone up. You know?
Hey, Madison, let me tell you something funny. That's wonderful. You know what's funny is that, like, back to the beginning of our interview, like you kind of said, like, what was the one moment? And I said, hey, there was a bunch of different moments, right? Yeah. But like, I mean, literally from 2016 to today, I have been researching cryptocurrencies, I'd say on a daily basis. It's like a passion of mine, right? Okay. And I'd be like in bed, like watching a YouTube video, reading an article from Cointelegraph. I actually started reading a book called Out of the Ether. Really cool book. Definitely worth reading. I'm going to do a whole video on that book. I would totally buy that. So, because it tells the history of Ethereum and a $55 million heist, which now in today's dollars probably worth a lot more, and how this hacker was, he basically extracted like, you know, $55 million at the time. And there was a group of these other hackers. They were called the Robin Hood group, and they were actually fighting online. It's basically robots fighting robots online for the money. And that's ultimately what led to the demise or the downfall of the initial Ethereum core group. And that's how Ether Classic came out. And it's a whole story behind that. And that's kind of, the team couldn't agree on how to solve the problem. Was it let the hackers keep the money? Because the hackers did get the money and has still never been named. Or was it the latter? So
right. And like, I don't think nothing with crypto right now is like SEC. Like, you're not having the SEC come into these places right now. The one thing I always talk about is, you know, the one thing I love about crypto is it's deflationary, right?
Yeah.
So, which is great. And like, the government can't fuck with it. Yeah. Let's keep it. But I don't like the government. I don't think they're working for the people anymore. I think they're totally fucking corrupt. Okay. I say it multiple times. I'm totally on anything that's against the government. I'm like, yeah. Right. So the fact that they can't touch it makes me just have more done.
Yeah. I mean, somebody has said,
I love it. You know?
That's cool. The invention of Bitcoin, a lot of people have said that's like having a Swiss bank account in your pocket.
Yes. And I love that the government can't ruin it like they did the dollar.
And that's
the platform in the 70s.
That's exactly that's the interesting thing about crypto, because if you think about it, crypto, it's not going to go away. Okay. Even if, like let's say they passed a regulation saying, okay, banks can no longer like cash out things from Coinbase, for instance, right? Which would obviously cause a massive market correction. Let's say that happens. It's not going to be a good day for anybody.
I hate the government. Don't let me hate them more.
But
start working for us again.
But the thing is, they can do that. But at the end of the day, two things. One, crypto still is crypto, and it can still be used, even if the government did that. It can still be used as a transfer of value, okay? Even without the US dollar. Because right now, I could say, hey, Madison, I want to buy your car. I'll give you 10 Ethereum. Are you cool with that? Okay, cool. Yeah.
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 Yeah, I would take that. Right?
Number two, if the government did do that, there's going to be a lot of other people in the world who are going to be like seeing that as a massive opportunity to accept crypto for fiat. So I don't think the government would do that. I'm just giving you a scenario.
No.
But crypto will exist with or without the government.
Yeah, and I think it was just last year for the 2020 return. Maybe it was 2019, but I think it was 2020 was the first year where the first question on the front of the tax return was, did you participate in crypto? I mean, they're like, well, fuck, we gotta, they gotta take their money because they take too much from us anyways. So they gotta get their cut, So as long as I think they're getting their tax revenue from it, then I think they'll kind of, hopefully stay away.
Well, if you get deeper into the crypto, we'll talk about later Wyoming LLCs and how that can be beneficial to saving you a bunch of money because they passed a lot of blockchain legislature. And there's ways to work with the state of Wyoming and
so,
really
so you could essentially set up an LLC and do all your crypto trading through your Wyoming LLC to reduce your tax. I mean, you're still gonna have your federal tax.
I think you might be able to do trading. I'd have to talk to my accountant about that. But I know
federal
if
you
have a crypto related business, I think trading would probably fall under that. Crypto related business, you can you can save a bunch of money through a Wyoming day. Instead of paying like, hey, like I'm here in Maryland, my average the tax, depending on how high it can go, it could go as high as 47%. Like it could go that high if you reach that
federal and state, right?
Yeah.
Okay.
State,
well, it's
right?
Now that we got bunker and raising
that's really still the roll of the dice with the Wyoming LLC. But if let's say things stayed the same, which 50-50, unfortunately, you could potentially, there's a way to only pay 21%.
Okay.
More on that.
Okay. So one last question, and then we got to wrap this up.
You're good.
One last question. Here, I don't know if we know this yet because it's new. What is staking going to be taxed as? Is it going to be taxed as income, or is it going to be taxed as long-term capital gains or short-term capital?
No, it's taxed as income from everything I understand.
So mining and staking are going to be taxed as regular ordinary income. Everybody move to Florida.
At the price you got it at too. So if you today at $1.45, right, and it goes to 45 cents, let's hope not, but if it does, you still owe on the $1.45.
Wait, so I don't get a loss. I can't write off the loss like you can with other stocks to offset the gains. Because in the stock, if you've lost on some but you've earned on others, you can offset. Right,
but from what I understand, not an accountant or financial advisor, obviously. But from what I understand is that if you got it at $1.45, then you would have to pay for the $1.45 even if it goes down.
But if you
even if it goes up,
not if you bought it. It's if you bought it at $1.45.
I'm sorry, not bought it. You earned it through staking. I'm sorry.
The one thing I do want to say is, and I just want to drop this because it's important, and this is just my thing. Do you guys want to know what's so much sexier than diamonds and Chanel bags? Money and cryptocurrency!
No.
Somebody said, can I give you a Chanel bag? I would be like, give me fucking Bitcoin. I don't give a shit about this stuff. I'd rather drive the dumpiest car but have a ton of money in crypto.
I just saw the best meme. It was a guy in an astronaut's outfit, and he's laying on a bed with no sheets on it, and it looks like a crack house, basically. Yeah. He's got an astronaut suit, and it goes, what cryptocurrency investors look like, or what investing in cryptocurrency looks like, where it's like he'd rather basically put everything into his crypto other than anything else. Like you're like, I'm worth $6 million. Sir, you live in a shoebox. You're like, yeah, that's
trust me, I find it so sexy that I'm just like, I'd rather have like all this shit. Like, you know what's better than nice shit? A huge bank account. But we're getting to the point where we're going to have both. And you guys, what's really fun about crypto or the markets and all this new stuff is the world's there's no reason to struggle anymore. Really do your research and learn.
Look into this. There's a woman named Caitlin Long. She's like a Wall Street veteran. She moved out to Wyoming. She participated in a lot of legislation that got passed in Wyoming, and she's starting a cryptocurrency bank out there. To your point, so that stuff is coming.
I love it. Yeah,
and I believe that will be U.S. regulated. Hey, Madison, it's been a pleasure being on your show, and I enjoyed this experience.
I appreciate it. Thank you, Scott. And you guys listening, wherever you're listening, I appreciate you guys tuning into another episode of Next to Madison. I hope you learned something. Again, go check out Wallace Inc. on YouTube. And the notes and all the links. Hang on. And the notes and all the links will be on our website at nexttomadison.com. And I hope you guys learned something. And again, we're not financial advisors. We're just offering our advice and what we've learned. So please just invest what you can lose. But hopefully, but you're gonna make money in our opinion. So anyways, I appreciate everybody, and we'll see you guys next time to find out who's next.
Hey, your host here, Madison Malloy. Please make sure to subscribe to the show on all podcast platforms, and please rate and review us on iTunes and Spotify. Also, if you have any questions or comments, you can email us at contact@nexttomadison.com. I thank you again for listening. Bye.